22 Business News Market Talk. I'm Richard Saxton. My guest today is Stan Harley. He is editor of the Harley Market Letter, Timer of the Year and Timer Digest in 1998, and is still #1 atop the timer list for his market timing using technical analysis, and as tracked by Jim Schmidt for the 52-week period gone past, ranked #1. Let's talk a little bit about how you've been successful, and you managed to beat the S&P, which is very difficult, isn't it? I mean, how many market moves in 1998 did you make to kind of sidestep the down and be in there for the big up moves?
There were 3 intermediate moves in 1998, from January through July, then the down move from July through October, and then the subsequent up move October through the recent period.
You are bullish.
I am, yes.
After 6-7 weeks of 1999. Why is that?
Richard, the market structure still remains quite positive. The market is correcting internally here. We've got the advanced decline line coming down with the Dow and the S&P within just a few percentage points of all-time highs. The cycles say the market should move higher. We've got some important intermediate cycle lows due here very, very soon. On balance, I like the structure. I like what I see here, and I remain quite positive. We're going to see higher prices in the spring.
All right, let's take a look at the numbers off your charts, that is. But when you look at the Dow and the NASDAQ has been outperforming?
Well, the NASDAQ has been, yes, exceptionally strong. And during the present consolidation period, it's going to pull back a little bit more.
All right.
Here we've got the Dow Industrials going back 2 years. And this is a daily chart going back the last 2 years. What I've got drawn on here are 1-by-1 Gann angles, which have done a very nice job of defining the market structure. Here we are right now in this region. You can see this angle right here, which is drawn from the August '97 high, has been the most powerful angle here in defining the structure, and we are hovering around that angle right now. I believe we've got about another couple of weeks of sideways consolidation to do, and then ultimately I think we'll break up to here.
Okay, let's go to the next chart, and then I'll start picking, trying to pick holes in your argument.
The next chart is the S&P 500. This is a daily chart, also going back 2 years, the same period that I showed in the prior chart. This is the April '97 low. This is a September, the October '98 low. Here we are in the current time frame. This is the high which occurred on February the 1st. We are doing some structural work in this area. I think we've got another couple of weeks to go, but I don't see much downside push in the S&P. I think the Dow and the S&P will be very buoyant. Some of the indices will come down a little bit more, like the NASDAQ and the New York Composite, but ultimately upside resolution into the spring.
Okay, we'll look at the New York Composite. Tell me why you've done the Dow, the S&P, and the New York Composite. You look at each chart? I
look at all of them, and they portray pretty much the same pattern, but for illustrative purposes here, I think the viewers would find all 3 indices very instructive. What I've got here is a New York Composite. Going back to 1994, I've shown a cycle that averages about 39.5 weeks, approximately 8 3/4 months. You can see with quite regularity, we tend to make nice little cycle lows. The last one occurred on October the 8th. The next low, based on statistical averages, is due in early July.
All right, now here's the big debate. The advanced decline line is deteriorating, and many are suggesting that one of the reasons, do we have that chart?
We will. That's the very next chart, yes.
Okay. But this is the argument. We're seeing the deterioration here, but you're bullish, and this is causing many to be bearish. Why?
Yes. Well, we are approaching a cycle low. The next intermediate cycle that I follow averages about 19 weeks, and we are very, very close to a cycle low in that chart. As you approach a cycle low, you're going to see deterioration in breadth. You're going to see new lows expanding. That's what you see at cycle bottoms. That's what we're supposed to see.
When the market corrects, it goes down. Is that right?
Yeah. Okay. It's reflected across the board. But the fact that the price indices are remaining near their high end, that is very, very positive. The market's very buoyant here, and we're going to see an upside resolution here very shortly.
All right. Stan Harley, who #1 market timer and Timer Digest right now, edits the Harley Market Letter out of Camarillo. He's my guest on Market Talk.